Alright guys, so let's go ahead, and today's video I'm going to talk about top-down analysis, how I personally go about it, and all the good things that kind of come with higher time frame. Now, if you're not new to my channel and you've been watching me for a little while, you know I preach higher time frame simply because it gives so much more of a range to play in, and it makes the market a lot easier to trade because you can expect bigger moves. Because obviously, if you're expecting a bigger move and you become really good with your top-down analysis, first of all, the risk to reward is higher, and you're able to, there's a little bit more leeway for error when you do have a very solid top-down analysis approach. So let's go ahead and let's get into the presentation. Now, firstly, I'm going to go over kind of like the presentation structure, how I'm going to go about it, and just, how we're going to go and tackle different topics. So the number one thing that we're going to go ahead and talk about is the time frames being used. This is obviously going to be very important because I'm going to break it from the weekly chart all the way down to the M15, M5. Now, we're also going to be talking about reference points. Reference points is essentially a key level. It could be what someone may call support, resistance, or if you're kind of like inside of that SMC community, it's more like a PD array. I'm going to talk about the reference points I personally prefer and the levels that essentially play dividends for myself and for a lot of other traders that I personally follow. Also, we're going to talk about how to go from higher time frame to lower time frame and kind of the succession of that, which time frames to use when you go on the lower ones. And again, this is all going to be based off my personal trading. Also, we're going to talk about liquidity buildup. So when you have a liquidity buildup and liquidity being engineered, and how this ultimately creates a bigger play. And I'm going to go over a gold example that I called out in my public Telegram inside of this presentation. And also, what's good about, also, what's the point of higher time frame if we don't know how to enter, right? So I'm also going to give us a very simple entry model that most people can utilize starting Monday, right? I wouldn't advise it, but again, it's a very simple approach once you get really good at the higher time frame, because you can use this simple model to get into the market and just anticipate a very, very clear trade setup. Now let's go ahead and let's get into it. So if you guys have been following us for a little while, right? Smart Funded Traders is now officially Skilled Funded Traders, as you guys can kind of see from the logo here. Now, again, quick promo before we get into the presentation, but again, this is just a kind of token of our appreciation. So we do use promo code SKILLED. You get 20% off any account size. Now, if you're someone who trades the lower account size from 5 to 25K account, we do have a better option for you. You guys can use promo code SFTCOMMUNITY. It gives you 40% off, a whopping 40% off on all accounts from 5K to 25K. And obviously the promo ends July 31st. And again, guys, take advantage because we are launching Think Markets. So we're very happy to have partnered with Think Markets. We wanted to add another broker alternative. So we do have Think Markets coming in within the next day or two. So make sure to go ahead. If you want to check out the spreads, you can use this account ID and password, and this is the server. You can go log in, see the spreads. Make sure to use the symbols with the X, and you guys will kind of have the ability to kind of play around, execute on there, try out your favorite pair. So make sure to do that and take advantage of the promo codes while they last. Now, enough of the promos. Let's go ahead and let's get into the discussion of higher time frame analysis. So let's go ahead and first, obviously, we've got to break it down. What time frames do I personally use? And I'm going to break it down here. So I've said it multiple times. Higher time frame to each trader is going to be different. For me, it's going to be the weekly, the daily, and the 4-hour. Now, the reason why I say it's different because someone who might be a scalper, their higher time frame might be the hourly time frame. And neither approach is necessarily wrong. It really just depends on your personal approach. But this is kind of how I do things. Now, the weekly and daily breakdowns are done to open up the week. We'll always start the week with a weekly chart. So if you've been following me on my public Telegram, you already know I always start off the weekly to see, hey, is there a potential to anticipate the next weekly candle? Because if we can anticipate the next weekly candle based off of a few parameters, we're going to be able to have a good directional bias for that specific week. Now, again, the reason for this higher time frame will typically have a draw on liquidity and offer a big range to identify a trade idea in. So it goes back to what we were saying earlier, where the draw on liquidity, whether we're looking for a key level to get hit or a liquidity pool to get raided, it gives a very big expansion move just based off of the range of one weekly candle. Now, I'm going to go over a gold example once I finish this presentation from the week of July 10th to July 14th. And again, it's an example that I personally talked about in my public Telegram before the fact. And as you guys know, I always like to use these examples because there's no hindsight with the analysis. Also, once we identify higher time frame levels, I'll typically wait for structure to confirm on the time frame lower. So if daily liquidity and reference point is resting, I'll look for maybe a 4-hour structure to confirm. And then you could look further inside that 4-hour structure, which we're going to get into. So I wanted to do a little visual because at the end of the day, it's very beneficial when someone has that visual to be able to kind of reference something. So we have the weekly time frame, which is where I personally start off. Then we go down to the daily. Then we go down to the 4-hour. This typically is for me to identify key reference points, identify higher time frame structure, identify higher time frame liquidity, and draw on liquidity. Once I'm done with that, if I have a clear bias, right, and not every single week, not every single day will have a clear bias. However, when I have all the frameworks coming together, what I will do is then I'll go to the entry time frames. For me, it could be an hourly time frame, it could be M15, it could be the M5. However, I personally like the M5 just because it gives a bigger risk to reward if you are really good at timing that specific entry. So, but you can still use the hourly time frame. One of my good friends does the hourly time frame just because he doesn't want to necessarily focus too much on like the lower time frame. Like too low a time frame for him, he kind of gets a little bit chopped up. And again, if that's you, be honest with yourself, and maybe the hourly will work better for you. Maybe the 30-minute will work better for you. Figure it out. These are just the time frames that I personally use and prefer. Now, let's go ahead and give a visual representation of the actual framework. So, I've talked about this multiple times. When we identify a clear impulse on the higher time frame, in this case, I'm going to go over a weekly time frame. We want to identify a clear reference point within that impulse. So let's just say we have a significant impulse price swing. Maybe price took out some sort of liquidity pool. Maybe price is creating this impulse off of an imbalance. If this impulse is coming off of a very key level, and we have an imbalance point in here, that is typically what I like to see. My favorite reference points are always going to be imbalances simply because they're going to have I've personally had the most success when I was trading these imbalances. Now, ideally on the lower time frame, on the time frame lower, so let's say we're going on the weekly. The way I personally go about it is if I'm going at a weekly level, I'm going to start to look at that weekly level from a daily perspective. So one time frame lower, right? So for example, let's just give an example of let's say if I'm starting on the 4-hour, I'm going to go one time frame lower for me. So since the next time frame lower would be an hourly time frame. And again, that's personally how I do it, and it's very structured in that approach. I don't deviate from that philosophy and ideology. We can look for 2 impulses, confirmations, or a clear displacement. So 2 impulse, I'm going to show it in the next slide. It's one of my favorite confirmation entries. I also have something else that I talk about in the academy, which is the failed structural play. So whenever I see a key level, now I need that confirmation at that key level, and that confirmation is going to come by the way of price action. You can also keep it very clean, and just look for a clear displacement. So when price kind of hits that level, we look for another displacement leg or another displacement push. So let's say price kind of pushes up here, and we create like another imbalance. That retest could be something that we're looking for to target potentially something up in here. So now here's a visual representation of that. So inside the reference points, I'm going to look for displacement. So this is what I mean. Like imagine you have this right here, and then you have this imbalance that forms as well. Now you can look to potentially look for entries in here, knowing that, hey, if we're going to make a higher high, or at the very least, if we're going to get close and test to that high, this is a tradable range from A to B right there. Double impulse confirmation for me would be something like, let's say you get something like this, and then another kind of like a double bottom formation. Now, let's go ahead and now that we kind of understand, okay, what am I typically looking for on the higher time frame and what are we looking for from a top-down analysis approach, how do we enter the marketplace? Essentially, this is the simplest trading model anyone could give out there. ICT talks about this religiously, about the weekly opening price and price kind of deviating below it and anticipating that range. That can be also applied on a daily time frame where you're looking for that, essentially that power of 3, as it's called. So let's just assume this is a daily candle and we already have our bias figured out. Once we identify a potential bias, we can simply look for a buy bias below the midnight opening price. So that would be constituted at 12 a.m. Eastern time. Once that midnight opening price is there, we're going to look for some sort of drop below that price point into a very key level inside of a kill zone. So this could be a retracement into a reference point on a H4, H1 from the prior day or days. Goal is to buy below the opening price. So again, midnight opening price, what we're trying to do is we're trying to get in sync with the marketplace at this specific low. Ideally, this low is hitting, some day, a prior day's key level. That's very key. Very, very simple model. And again, I don't want to complicate it for anyone. It's really that simple. However, you do have to get good with identifying a really good bias, and you also have to be good at waiting, because not every single day will have a great bias. So let's go ahead and we're going to take a look inside the gold example from this week. And again, if you want to join the public Telegram where I kind of break down my charts before the fact, the link is in the description below. So, and also if you want to take advantage of the promo codes, make sure as well, because the link is in the description. All right, guys. So again, I'm going to break down this example because it has everything that we were kind of referring to. So we can obviously look at this specific impulse here on the weekly time frame. So let me go ahead and map that impulse from this swing low to that swing high. Inside of this impulse, what do we have? We have this impulse was essentially created off of this prior consolidation, and price made a new high, and we had a big displacement. So when the market is kind of looking like this, for example, right? What are some key reference points within this range that we can utilize for a potential bias if price ever comes back into here? Essentially, it would be this little inversion of this bearish imbalance. We also have this bullish one from here, so this is a very key level that we can identify in terms of price potentially making a higher low, at the very least get some sort of a reaction. So obviously I'm going to just fast forward this, and boom. So this is what I saw and going into the new week. Essentially, we formed a 3-bar pattern. So when you have a swing low that's forming, I've talked about this in the candlestick video. You have a candle like this, then you have another candle, then you have that third candle. So you're kind of forming that swing low. So the middle candle has a low that's lower than the one on the left, and the one on the right, this constitutes a swing low. So if we know a swing low is potentially forming, what can we anticipate? We can anticipate that power 3 concept, where we have the weekly candle, price drops down, and then potentially have an expansion up. And again, that's exactly what kind of happened going into the new week. This was a candle that formed, and again, using that same concept, you have the opening price on the week, you have price kind of dip down, and then you have the expansion move up, and then price comes off the high. We form a bullish imbalance. We formed this bullish engulfing candle. Now, like I said, I'll go down to a time frame lower. So to open up the week, price was right here. So once price kind of created this going into the new week, I was anticipating some sort of drive. Okay, so now we have the bias, right? Now also, what do we have here? For me, this is essentially my 2 impulse, where the market kind of drops down into this key level. We have a very big push up. The only thing that was missing, and I talked about this in the public Telegram, was that there was no imbalance. However, we have this impulse 1 up, we have price coming down. Price maintains this low, and we have the second impulse push up. Boom. That for me is good enough. I'm anticipating, and again, what do we have here? Swing low and swing low. So now I'm anticipating this daily candle to maintain this structure and then potentially push to the upside. Now this is where we kind of blend in a few concepts, right? The reason why I like this so much, and I talked about it consistently, is because there's so much liquidity, right? We have all these highs that are kind of maintained, that's built up. When you have a bunch of highs that's built up and you have a premium level above the marketplace, this is typically going to lead to some sort of really big squeeze, and that's something that I talked about. So obviously we're going to play it down, and this was going into Monday's trading session, and let's go down to the 4 hour. So let's see if we can kind of find any confirmation. So obviously on this day here, this is where we got our key pivotal market structure break. We got that market structure break, and let me make this a different, okay, boom. We got our market structure break. This was the last high before the market swept lower. Boom, we broke back above. Now inside of this range, we can look for a potential buy point. And essentially we got that imbalance in here. Admittedly, I thought we were going to kind of maintain up here and then push and just stay aggressive. But you know how gold is. We got the full retracement leg lower, and it's as simple as this. You could even just draw the Fibonacci, look for, the OTE, which is the 62, the 70 area, and then look to target the extension targets, which was essentially that imbalance on the daily time frame. However, again, if you want to go on the lower time frame, and all right guys, so essentially now I went ahead and put the kind of like the indicator. So I put the day text indicator right here, which is going to show the trading day. So this was Monday, and I'm going to also put this one right here. Shout out to TFO, ICT kill zones plus pivots. This essentially helps me plot the true opening price. True open is just the midnight opening price. So again, you can just kind of see it visually. So let me go ahead and make that a little bit more clear. I'm going to go, and you could do a bunch of cool features if you guys want to go ahead and check this indicator out. And the true opening price, let me make that like a little bit darker color right there so it's more visible. So again, if we're anticipating buy, okay, so going back to that daily concept, right? If I was anticipating a move below the opening price into a key level from the prior days, what can I anticipate in here? Now you can kind of go on to M15 if you want to, which I'm going to go ahead and do. And this is funny because this was the trade that I was like kind of got stopped out in, where I had this imbalance point, price just dropped below into the London session, hit that level, so we're now below true open. I'm anticipating a daily expansion. Price ended up pushing higher. However, again, going back to I think the 4 hour imbalance was around this low. Sometimes price is going to go and head a little bit deeper than you thought. It's okay. This is why we have risk management. So obviously, if you, let's just say, I personally didn't move to break even because I was asleep. Price pushed up, dropped down. Again, if you kind of see this potential drop in here, you can either go long because we're below the true open, we're going into a key level, and we're still anticipating that daily expansion. And then as we kind of play it around, going into the following days, we're going to go ahead and let me go and just play out the week overall. Again, same concept. What do we anticipate when we're kind of anticipating bullishness, right? We're anticipating price to kind of go below the true open into some sort of key level. This one was very minor in this example on Tuesday. True opening price really just kind of rallied off that imbalance and then go over here. Sure, we hit the imbalance, but again, gold, if we're anticipating a bigger move, look what happens. True open, price drops lower, and I guarantee there's some sort of imbalance here on the 4 hour or the 1 hour. And just for completeness sake, let's go ahead and actually look at that right now. Yeah, so on the hourly, boom, price kind of below the true opening price. Price goes into an imbalance from the prior day, or this was actually inside of the session. So the price, again, go back to it, right? Price has that true opening price into this imbalance, and we see continued expansion. So when the market is trending, this is probably one of the easiest entry models anyone can utilize. So this is why I kind of tell people hey, you don't have to complicate it. You can literally just look for, be good at creating a bias. Once you create the bias, go ahead and use this simple entry model. It really can be this simple, guys, but the problem is waiting, and the problem is also not rushing a bias, because sometimes people will just want to trade every single day. But again, hopefully this video kind of gave you guys illustrations on how I go from a top-down analysis approach. Let me know if you guys have any questions. Also, again, don't forget about the promo codes. They are going to run out. Some of them are going to run out this week. Link in the description below for all that information. And again, guys, let me know what you guys want to see on this channel. I'm more than open to creating any types of video. And if you want to just, again, stay up to date with my trade ideas, join the public Telegram in the description below. And I'll see you guys in the next video.